Do you want to know how you can easily scalp the crypto market using a very simple and easy to understand scalping strategy? Well, in today's video, I'm going to show you exactly that. But before we jump into the tools that you need to actually trade with this strategy, I would like to remind you guys to like the video and subscribe to the channel. The two tools that we are going to be using is we're going to be using 3 EMAs, exponential moving averages. Now you can use a different combinations of EMAs, and I do think it's a good idea to experiment and try different combinations out to see what works best for you. Some people like to use the 21, the 55, and the 89. I personally use the 20, the 50, and the 100. So as you can see here, you have the yellow 20, the green 50, and the blue 100. I've also added the stochastics RSI indicator here at the bottom with two horizontal levels, the gray one being down at the 30 level and the blue one being above at the 70 level. So that's the only thing we're going to be using. Now let me quickly walk you through this system, and after watching this video, what I would like you to do is take the new knowledge that you've learned in this video and go into the market, try it out on Bitcoin and altcoins. It works great in the Forex market as well, and backtest this and see for yourself and try it out for yourself. It actually works and it's very simple. And when you backtested it and you have some confidence, go right into the live market and you see for yourself, right? So I'm going to give you a framework here on how to do this. Then it's up to you to fine tune it to your own liking. I'm using the 15-minute time frame here. You can use this on the daily, the 4-hour, the 1-hour, the 15-minute, the 5-minute, or even the 1-minute. Obviously, the lower you go into the time frames, the more complicated and harder it gets, and you need to be able to faster, react to changing market conditions, right? So I would recommend staying at the 15-minute and maybe go down to the 5-minute when you've got more confidence, right? But 15-minute is good. So let me show you how this works. First of all, you want to have some type of trend, right? And you want to have these 3 EMAs being evenly and nicely fanned out like this. They're not going to crisscross like this, right? When they crisscross like this, there's not going to be a trade. You want them to be evenly and nicely fanned out like this. It doesn't have to be exactly evenly fanned out, but you need to have space between the moving averages, just like we have right here. And I marked out a couple of good examples of entries using this strategy, and I'm going to show you what the entry triggers and the strategy is actually based on. So when you have a downtrend like here, right? So you had some type of low time frame range, you broke down, you have a downtrend forming here on the 15-minute with lower lows and lower highs. And you can clearly see here that price broke down and it took the EMAs with it, obviously, because that's how they work. They are now evenly and nicely fanned out. Now, what you're going to be watching is for a retest of either the 20 EMA, the yellow, or the 50 EMA, which is the green right here. And the entry is only going to be valid if you have a proper bear cross above above 70 on the stochastics RSI, while you are seeing either a bearish engulfing candle or a bearish pin bar. So if you check this candle right here, that is a bearish engulfing on the retest of the 20 EMA, but stochastics is still bullish, right? Now what you have on the next one right here, you have a bearish engulfing on that candle right here, and then on the next candle the bear cross on the stochastics RSI is confirmed. So what you want to do here is you want to enter on the candle close of that candle right there when the stochastics turns bearish and you have a bearish engulfing candle right here, and then one indecision candle, if you will, afterwards. So really the entry trigger, what tells me to go short here is the bearish engulfing, and then on the second candle you have a bear cross. So it's actually the bear cross and the bearish engulfing that tells me to go short. If those happens at the same time, that's obviously a the best type of confirmation of an entry. Your stop loss should be above the wicks, right? So somewhere in this area right here. Now, when you backtest this, you're gonna get different results, obviously, because you're gonna be watching the market slightly different than me. So dependent on your win rate when you're backtesting and forward testing, you have to adjust the take profit strategy based on your win rate, right? So if you want to learn more about that, definitely check out the free trial that we got going on. You can go to birbnest.com/free trial, join that one, and I'll be able to answer all the questions that you have around this one. Right, so there's two take profit strategies you can use here. Either you exit fully at whatever R is needed for you to have a profitable strategy. So if you have a 70% win rate, obviously you can take profit at 1.5 or 2, and you can also trail your stop down with a with a manual stop loss, manually trailing your stop loss down with every new swing high. So that would mean you have the stop loss right here, then you have the stop loss right here, and you will get stop out somewhere in this area. Personally, I just let it run to somewhere between 2 and 3R. So this would be great. Like you have 3R right here, which kind of creates a new, goes past that low and creates a new one right here. I always move my stop to entry at 1 to 1R and then let the trade run as much as possible. So let me show you a couple of more examples here. So we see here to the right, we have actually, that's not a, well, I guess you could call that a bullish engulfing candle. So you have a bullish engulfing candle right here and a stochastic bull cross. So you would want to enter on the candle close of that bullish engulfing right there. And like I said, I would like to take profit as somewhere between 2 and 3R, and in this case 3R works beautifully. Obviously not all trades are going to be winners, but there's some good examples of what you want to see to actually enter the trade right here. So you have a bullish engulfing on the 50-minute right here, stops go below that one, stochastic bull cross, almost runs up to 3R here. And yeah, that's pretty much it, guys. So to sum it all up, you want to have the stochastic RSI on your chart. You want to have the 3 EMAs, the 20 and the 50 and 100 is what I go with, and you want the EMAs to be nicely fanned out, just like this, right? Just like this. And you're then gonna go long or short. In this example, you want to go long on the retest of the 20 EMA or the 50 EMA with a bullish engulfing or a bullish pin bar with a stochastic bull cross below 30. All right, guys, that's it. I hope you like videos like this one. If you're interested in learning more about the Birb Nest or checking out our community, go to birbnest.com/free trial, and you're going to be able to try it all out for 7 days for free. All right, guys, take care, everyone, and see you guys in the next one.